Thanks for staying with us. This is Business Incorporated coming to you live from Lagos. I am Bisi Adebayo. On today's program, the International Monetary Fund launches its regional economic outlook for sub-Saharan Africa today. And cocoa farmers in Ivory Coast worried about the impact of insufficient rain. Plus, we'll take a look at the absence of Nigerian delegates at the just concluded World Economic Forum for Africa meeting in South Africa. Well, we'll kick off the program with the markets here in Africa, where all the numbers are in the green at intraday. Nigeria's NSE All-Share Index was trading up 0.32%, while the GSE was up 0.67%. The market in Kenya is still trading, but closed up 1.18% on yesterday. Well, Egypt was up 1.0 at intraday. And in Europe, the markets moved higher during mid-morning deals today, supported by an upbeat session on Wall Street and a stabilization in commodity prices. Investors also have their eyes on the VIX Volatility Index, a common measure of fear in the stock markets, which sunk to close at a 23-year low today. DWTV Channels TV correspondent Conrad Bossen joins me now from Frankfurt for more on the market. Thanks for staying with us, Conrad. Well, let's begin this conversation with the VIX Volatility Index, which closed at the 23-year low today. Does that mean the fear over the geopolitical situations and oil price shocks are tapering?
Well, BC, some are seeing it this way. You know, those volatility indices like the VIX, which is based on the American S&P 500 index, or the VDAX, which is based on the German share index DAX, they are based on the prices for options on those share market indices, which means that investors are buying them in order to hedge against the risk of a downswing of those indices. Now, after the election in France took away a huge risk, at least from the point of view of many investors, those investors are selling those options, are selling many of those options, and they're not buying new options. And this is why the volatility indices have been going down to those very low levels. Does this mean that equity markets will continue to trade on the level that they're on now, or that they even continue to increase? That's very, very difficult to say. A trader I talked to reminded me that at several occasions in the past, when volatility had gone so far down as it is right now, a certain amount of time afterwards, a huge sell-off on the equities markets happened. It was the case when the tech bubble burst around the year 2000, and it was also the case before 2007, 2008, when we saw the Lehman collapse and the ongoing financial crisis, or the following financial crisis. So this low volatility now might just be some calm before a large storm.
Yes, indeed, Conrad. But data just out shows German industrial output declined in March. However, imports and exports hit a record high also in March. What does this number tell us about Europe's largest economy?
Well, it's a piece of news indicating strength, of course, and it's news which helped the German share market on a new record high today. Look at it. This is what an all-time high of the German DAX looks like. And it's really encouraging for investors, because it also means that we're finally getting hard data which is giving reason for optimism. Not only sentiment data, and not only the speculation on the future of Emmanuel Macron, or the speculation on Donald Trump and infrastructure spending in the US, but very solid exports, very solid company earnings, and that justifies a certain amount of equity or share buying. Of course, the question now being discussed on the trading floors is how long can this stay this way, and what the geopolitical risks, which still are on the table, what kind of impact they will have on future numbers.
Before you go, can you talk us through Commerzbank earnings, which was released today?
Yes, I can, BC. First off, the numbers were better than what analysts had forecast. Commerzbank's shares are currently the biggest gainers of the German DAX. The net profit of 217 million was much higher than what analysts had anticipated. It was also 30% higher than the net profit during the first quarter of last year. But make no mistake, BC, this does not indicate that Commerzbank is really out of trouble yet. The main reason why this net profit was so much higher was that one large loan, which already had been booked in the internal bad bank of Commerzbank, didn't turn out to be that sour after all. So it could be upgraded in the balance sheet of the bank. The operating profits of the bank in its private customers and corporate customers business still has to struggle. The numbers are still not looking good, and the bank is currently in the process of laying off thousands of employees. And this is going to cost a lot of money before it finally and eventually will pay off.
Well, thanks indeed, Conrad, for those updates coming there. Conrad Bussen is DWTV Channels TV financial correspondent.